Are you nearing retirement or maybe in retirement? Or perhaps you have had a 401k at a previous employer and now you're at a new employer and you're trying to consider what you can do with those old retirement accounts. Can you consolidate them? Can you move them? Or do you just need to leave them where they're at? I want to talk you through some different things to consider as you think through what can be done. So let's just talk briefly. A 401k, when you're wanting to move it out of a retirement plan or out of your employer's retirement plan, it gets moved to an IRA, and this is known as a rollover. So you're going to roll it over to the IRA. Similarly, a Roth 401k gets rolled over to a Roth IRA. So these get rolled over. This is a non-taxable event. So when you're just simply rolling one account over to the other, there's no tax implications. So that's important to know. Let's talk through the different things to consider, and then I'll also mention a couple points that you need to be thoughtful of. So first off, what are the investment options that you have available in all of these types of accounts? If I'm going to move it from a 401k to an IRA, what's the difference in the investment options? So for example, in your 401k, your Roth 401k, these typically have a limited choice of investments that you can choose from. So even though it may be a long list of investments you can pick from, it's still a limited list. So in the IRA, in the Roth IRA, at the custodian that you choose, you have an unlimited potential to purchase, buy, or sell any investment that you want to. That's the main difference in the investment options. Next, the access to funds. So now if you need to get money out of the account for living expenses, how do you get funds out? So for example, your 401k, Roth 401k, you may have to go through the plan administrator, through the HR department at your company. You may have to go through them first to get funds out. Whereas if you roll over the funds into an IRA, it's in your name, so now you have direct access. You can sign the form yourself to move those funds. You don't have to call to get a form maybe first and then have it done. But you just need to know what's available or how this works. So next are the fees. It's really important because these can vary. So with all the investments that are available inside your retirement account, they should be telling you what the fees are, the expense ratios, and also with an IRA or a Roth IRA, what are you going to be paying to buy or sell something? All of these things are important to pay attention to. So you really want to examine them before you take any action. And then lastly, are RMDs required? So required minimum distributions at age 70 and a half. So from a 401k and IRA, yes, they are. Those are both tax deferred accounts. A Roth 401k, while the distribution is not taxable, as long as it stays in the 401k, you actually do have to take an RMD. So even though it's tax-free, you still have to take a certain amount of money out every year. However, if you roll it over to a Roth IRA, now you don't have that RMD requirement. So that's just something to be thoughtful of as you're planning for the funds that you need. One last thing that I really want to be sure that you understand is how these funds are rolled over. So there's two different ways, a direct rollover and an indirect rollover. A direct rollover means that the custodian with your 401k or your Roth 401k is going to send the funds right to the other custodian directly. You won't be involved. With an indirect rollover, that means that they may actually send the check to you first, and then you have to send the check to the new account to get it deposited. And it's really important to understand that you only have 60 calendar days, so it's calendar, not business days, to get that check deposited into the new account, or else it all becomes taxable or it all is distributed from that account. So it's really important that you pay attention to the calendar. There's typically enough time, but sometimes things get caught in the mail. So you have to stay on top of when the distribution came out of the account, when it was made, so that you can keep track of and know how long you have to get it into the next account. If we can be helpful in helping you think through all of these things or what may work best for you, please reach out. We'd love to work with you to make sure everything's getting done as it should.